Well, yesterday when President Trump met with Canada's Prime Minister Carney, he said there was going to be a really big news coming out later this week. It seems like the really big news is that U.S. and China will be meeting in Switzerland later this week to discuss trade. Don't expect miracles at the beginning, but it's a step in the right direction, I guess, for global tensions to come down. As a result, we're seeing U.S. stocks higher. We're seeing yields also move higher a little bit, and we are seeing the U.S. dollar move higher, especially against the three major currency pairs, which I'll focus on in this video. So let's get started. Now all the fundamental news is out of the way. I talk about the technicals in this video, and the euro versus U.S. dollar and the hourly chart has been trading, waffling up and down. This line right here at the 1.12738 level is in between 1.1271 and 1.1275. And for those people who have ever seen my video over the last, I don't know, couple weeks, that level or that area represents the 61.8% retracement of the range since 2020. It also represents this high price going back to 2023, the high price from 2023, July 2023. So that is where we keep on finding some support buyers on dips after we broke above it in the month of April. So be aware of that. Let's go back to that hourly chart. That's this red line right through here. And yesterday, the low price came down toward that level. Found support buyers earlier or last Friday. The price moved just below it and moved to the low that was just below it back here, forming this double bottom. So you can see what's happening. Now, the 100 and 200 hour moving averages, they're in between. And in trading yesterday, we traded above and below it. We could, once again, we failed on the move above, failed right here. And then we failed in the early Asian session as well, with the price moving down to retest the 100 hour moving average. But then buyers came in against that moving average, pushed the price back above the 200. And what is interesting is that the low price that we saw, a corrective low price, just a few hours ago, or an hour or so ago, came right down to the 200-hour moving average and is finding support buyers. So guess what? That's going to be support. Now that we've sort of broken it a number of different times and failed on a number of different times, maybe this is a time that we stay above it. That's what traders are going to be hoping for if they buy against that level. The risk is that if the price goes below it, or maybe even below the 100-hour moving average, if it goes below the 100-hour moving average, you just get out because the bias shifts back more to the downside from a technical perspective. On the top side, we have this top side trend line. Then we have the maybe this high price right through here, which was a high price from one of the days last week. We start to tick away at these other high prices in this very narrow trading range through here as the market tries to figure out where it's going to break. And right now, the bias is more to the upside above the 100 and 200-hour moving averages. So as long as it does that, stays there, then we can hope for further momentum in the upward direction. Otherwise, we're just going to sit here and go nowhere. So we as traders always look for moves, right? Because that's why we have markets. So that's what traders will be looking for. Let's take a look at the dollar versus yen next. And on the hourly chart, we fell below this cluster of moving average, including the 100-hour moving average. This is all yesterday. 200-hour moving average, 100-bar moving average on the 4-hour chart. You can see how the 100-bar moving average is trying to hold support here, just like it held the 200-bar moving average on the 4-hour chart up here. But then we broke through it and looked like we're heading down toward this swing area but here, but we couldn't do it. We rotated back and forth above and below that 100-bar moving average, which again is unsettling from a technical perspective. But we did find support buyers again near the low price from earlier in the day, and we started to rotate back to the upside in trading here in the today. We did try to break back below the 100-bar moving average after a move back above, but then, like the euro versus US dollar, found support against the moving average and is starting to move back to the upside. We have the 100-hour moving average, the 200-hour moving average, 38.2% retracement of this move to get to and through. If the buyers are to take back more control, that's just the way it is. So be aware of those levels: 143.51, 144.05, and 144.208 are those targets on the top side. What we don't want to see is a break below the 100 bar moving average on the 4-hour chart at 142.84. As long as the price remains above that level, the hope for further upside momentum can be anticipated. Finally, let's take a look at the sterling versus US dollar. And in trading yesterday, we did move above its moving averages here, the 100, 200-hour moving average, and also moved above this swing area through here, which I had earmarked as sort of ahead of the extreme. It was defined by different levels through here, which you see up, down, break below, then move back above it here and try to hold support against it here, and then break below and use it as resistance through here. And in trading yesterday, we moved above it and below it and above it and below it. And now we are below it again. The 100, the area comes between 133.61 and 133.78. As long as we can remain below that level, the shift remains to the downside. Having said that, our 100 and 200-hour moving average are also trying to hold support down here. We broke below 200, but couldn't quite get to the 100. Some 3 pips away, and we stalled in between those two levels. So 133.10 is support at the 100-hour moving average. 133.32, 33 is closer support. The buyers are trying to hold on to control, though they are holding on control above those moving averages, but they have work to do. And if they get above the swing area right here, then we'll start to look toward other levels up here, including the high price that came up to 134.41, 134.33 is another level, and 134.23. The 33 level, by the way, goes back to our daily chart. If we take a look at that, this high price came in at 134.33. That was a high price from 2004. So be aware of that, why it's so important, and why we traded up to it and found resistance, why we traded above it and failed, and then used the level as resistance here before moving to the downside. It all makes sense from a technical perspective. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.